Hi, my name is Sukrit Ghate. I'm from Perpetual Profits, and today we are going to be looking at the Nifty chart. So let's get started. We're going to be looking at the weekly chart and the daily chart. These are the two charts that I'm going to give my maximum weightage on because of the way the market has been moving and the kind of reactions we are seeing from the demand and supply zones that are being formed. So this is a supply zone that I've marked in my previous videos also. I'm marking this in this video as well, and I'll tell you the reason for this. So the main reason is this supply zone has not been tested once, twice, thrice, but four times, right? And this is the first time, this is the second time, this is the third time, this is the fourth time, and surprisingly or not that surprisingly, it's come here again for the fifth time. So what that shows us is that this supply zone definitely has a lot of strength in regards of how the weekly chart we are looking at as of now. Weekly Nifty chart, right? So the supply zone that I marked here is a rally, base, and a drop. So the rally is this green candle, this is the basing, the red candle, and this is the drop. And this supply zone has formed quite a few other supply zones. And I'm saying that because when we go to the daily chart, we are going to be looking at a daily supply zone which has been formed by a weekly supply zone, which in fact has been formed by the zone I've marked, which is again a weekly supply zone. So this weekly supply zone has formed another weekly supply zone, and that weekly supply zone has formed a daily supply zone. And why I'm saying this is because how important multi-time frame analysis is. It can really show you a better market movement, and it can also help you refine your zones that you're marking. It can be a supply zone, it can be a demand zone, it can be a zone that you're trying to execute your trade on. No matter what, multi-time frame analysis always is very useful. So over here the weekly supply zone ranges from 18,150 to 18,710. So this is quite a big range, and if you had to trade this, it would take you a while, right? Like you would have to trade some contracts which are quite far away, or for it to give you a reaction you would have to wait at least a couple of weeks, because a small red candle like this would be something big on the daily chart, and that is something when you do multiple time frame analysis you'll realize. So this is out of the way. The next thing I would like to show you is the daily chart. I'll just erase all of this so you can look at the chart once again. Now I'm going to the daily chart. As you see, I have gone to the daily chart, and you can see how many more candles are there on the daily chart compared to the weekly chart, because now we've gone to a smaller time frame and we are refining it, hence the more candles. So you might be wondering which supply zone I was talking about and what its reaction was and stuff. So I'd marked it in I'd marked it a day back itself, but I'll just remark that zone. So I'll just zoom in a little so you can see it a little better. This is the daily Nifty chart. This is the supply zone that I marked over here. And again, this is again a rally, a base, and a drop. So this is the rally, this is the base, and this is the drop. So this is the supply zone that I've marked here. I actually marked it a day or so prior, and I'll show you what has happened. Let me just delete all of this. So the market has given a small reaction to it today. As you can see, I was talking about a small red candle on the weekly chart, which is a little bigger on the daily chart. When you look at it, it would be, it would be all these candles, and especially today, this is the candle that was formed, which has given a reaction. It was maybe a 40 to 50 point reaction, and I'm hoping for it to come down a little more, since it has already reacted to this zone. So this was a fresh zone, and it's got quite some qualities to make this trade profitable. So I would like to show you another thing, which is the trend. The trend from here to here, this particular area, is uptrending. So what can happen is that this particular candle can be the last candle for today, and then there will be new candles, right? Maybe a couple of more candles, a little bit of a fall, and a demand zone somewhere would give a reaction, and the market would go up, because the trend is uptrending and there are quite a few demand zones in this area. And if that happens, it won't be something that is surprising. And I'm not trying to predict the market, I'm just giving a small overview of what might happen. So I'll go back to the weekly chart again. I'll tell you what you should be looking out for mainly. So this was the main supply zone that was formed on the weekly chart. So it's given us quite a few touches. If you look carefully, even to the naked eye, it's quite evident that there is some kind of resistance, or there's some kind of area where there is a fall that is happening once the market is reaching that point. So this is the fifth time, technically, if you speak, this is the fifth time the market has entered this particular zone. And I would definitely say that the strength would have reduced, right? And what that means is if the strength of a zone is reduced, the chances of the prices going deeper into the zone like this are higher, because if a wall is being, you know, if it's being hit a lot, eventually it's going to break. So you can look at this particular supply zone as a wall, supply zone wall, which is being hit once, twice, thrice, four times, fifth time. It's taken quite a lot of hits, right? Usually these supply zones are broken in the first two or three uh, times itself, right? So if the market has been tested, sorry, if the supply zone or a demand zone has been tested 2 to 3 times, it's generally not going to work anymore. So this has definitely worked much better than any average zone, and it's held its ground. So the strength has definitely reduced. Hence, what is likely to happen is the prices would go deeper into this zone, and let's say the zone is given a reaction. So once you get a reaction, it can be a small one also, something like this, right? And go up again, something like that. Or if it breaks this zone, if this zone is broken, then what is going to happen is all time highs are going to be formed. If this supply zone is broken, and that can definitely help us in ways that we've all been, maybe somewhere hoping or somewhere guessing that the market might now definitely make some highs and all time highs are likely to happen. But it's very crucial for the market to break this particular zone, right? And that talks a lot about how the market has been. It's been quite positive, which is a good thing. Many of the investors would be having a gala time right now. As a trader also, you can make money off trending markets, so that is a good benefit. And what you can do as someone who is planning to take a trade is have some patience, trade with stop losses, and if this zone is broken, we can expect an all time high. If this zone is not broken, we can expect a small reversal. It can be drastic, a little bit dramatic also, or it can be something that is small, gave a small correction and went back up. So these are some 2 3 possibilities that are most likely to happen. But the market never fails to surprise us. So this was the analysis for today.